Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about our weekly swing trading routine that I do every single Sunday to ensure I know exactly what to do for this upcoming week and I have some sort of plan. I always imagine going into the week like a football team going into a game. You have to have a plan. You have to have a playbook and an idea of what's going on with positions that you're holding and stocks on your watch list. So I hope you guys all enjoyed today's video. If you guys do, hit that like button, subscribe, and if you guys want to learn more about swing trading and trading in the market, check out our school. We're doing a 51% off sale, which is the largest sale we've done. And guys, this is our Black Friday sale. You guys can use code Black Friday to get 51% off, which is crazy. So sign up, click that link, and honestly, in the school we talk about how to find stocks, how to find those undervalued plays, when do you buy, when do you sell, all that really important stuff. And it's not a get rich quick, it's not alerts or anything like that. It's honest ways to make a living trading in the market. So check it out down below, you won't regret it. And let's jump into this here. So as of right now here, the first thing that I always do going into the week is review what stocks we're holding. So as of right now here, we're holding Apple. We thinned out some Costco shares, so we still actually have a couple of shares of Costco. And then we have ticker symbol KFY here. So with the Apple play here, what I always want to do here is know exactly what's going on. So what I'm going to do here is go to the hourly chart. And you guys can see where it had that really hard support here on the hourly. And that's kind of where we got in on this trade. And the stock kind of slowly turned around in this direction. We did get this huge amount of buying pressure where the stock went from about 222, popped up above these moving average lines, which is a very bullish thing for the stock to do. So now the thought process that I have is this, is if the stock just dips down below these moving average lines, like near and around the 225 range, we'll just take our loss, take our profit, honestly, because we would still be up on this trade, near and around 2%. And in the hindsight of trading, I'll gladly take 2% every single trade. What makes up a successful trader isn't these massive returns. It's these 1, 2, 3% returns that just compound over the course of a year. So given that, we're up above a moving average line, it could act as support where it already kind of had some confirmation. I do think we could get some more buying pressure. If it does dip down, we'll just take our profit, move on to other plays. All right, so then Costco here. So Costco stock here, we'll kind of break down why we bought it because it's very important here. So you guys can see that this stock here on the daily time frame has heavy support here on this blue line. So the moving average lines that I use here are the 90 and the 200-day moving average lines. Now the main difference between the two is the red is the 200, the blue is the 90. Now the red is going to act as a harder support and a harder resistance. So you can kind of see where when the stock kind of sells off below it, it hits it and just has a hard time, a lot more consolidation, a little congested in that range. So now that the stock sold off down to this level in the past here, hit it and we had good buying pressure, my thought process was this. We have that general trend line. We could get in on a trend line breakout or a breakout here on the hourly. And that's kind of what I did here is I entered on the breakout of the hourly time frame. Now, why I did that is because it had good risk and reward, and you guys can see it followed up by a huge amount of buying pressure. So now what I actually did here, with this stock, because literally in the matter of a couple of days, right, we were up 8% at one point, like 10% or so. So we had a day where we were up over 5%. So I really wanted to take action on this trade. So, I always want to go ahead and look at, some lower time frame and just get a general idea of what's going on here. So with the stock squeezing up, what I did is I wanted to thin out some of my shares when we had a candle on the hourly break below the previous candlestick. So I'll kind of show you what I mean by this. So you can kind of see where this stock squeezed up. Our stop loss would be here. Now, as the stock goes up, now our stop loss is here for this candle. Now, as the stock goes up, it's here. And then for this one, it's here. So on that turnaround where we had that dip down, we actually sold about 85% of our shares, which honestly, the reason why we sold so many is because we were up. I've never lost money taking profit. And given we were up 10%, I'm going to take profit every single time. And given how fast the stock was squeezing up, I just wanted to take action. I didn't want to sell all of my shares. I wanted to have enough shares to say, okay, if we have a dip down and then a rally up, I have some shares to make some good money off it. So now that's the thought I have with that one, is just continuing to hold. And we're going to continue to hold. If it dips down below like the 925 range, we'll just take our profit, move on to other plays. The last play here is ticker symbol KFY. As of right now, our stop loss is at 77.26. Now, looking at the daily, very similar situation here. 90-day moving average play also had heavy support here on this trend line like such, where it hit it and we have good buying pressure. Also, the hourly had that good breakout like that, where it broke out, rallied its way up. So this is what I do, is I review my trades. But, with trading, stocks you're holding is only one piece of the puzzle. You also have to seek out opportunity. So we went ahead and we looked at our scanners here, and I want to talk about how I go about, kind of incorporating, where some good entry zones are. Now, obviously, take this with a grain of salt, because everything can change in the matter of hours and minutes with trading. So with HL here was a stock we found on our scanner. Looking at it, the RSI is at about a 28, which is a super undervalued spot for the stock, right? You guys can see the last time I was trading for a 28 was back in here, where we had that good move, where we had, good moves in here, good move in here. So I know that the stock could carry some potential here. It's also trading on that 200-day moving average line, which has had confirmation of support in the past, a little dip below it, but in general, right, heavy support there. Also, if we go to like a lower time frame, the thought process I have is this, is if the stock breaks above this trend line, this could represent a good entry point, right? You can also draw out some zones for buying here. So let's go ahead and do that. So now looking at it, we have this nice little channel going down. So if we could get in on a breakout going above, possibly above that 200-day or that 90-day moving average line, we could have that trend in that direction. Now, obviously, if you entered here at the current price, yes, you would be getting in on a cheaper price. But the last thing you want to do is continue to see this stock squeeze down like this. So, that's the benefit of waiting for confirmation. But also, if you entered with a small position here, you always could add more when the stock squeezes up. So doing stuff like this, and what you would want to do is just throw an alert there so you get notified for that possible entry price. And you really just continue to go through and look at stocks that you have on your watch list. So something like this does look interesting. Just released earnings. As of right now, we're going to continue to hold off and wait for more candles to form on the hourly, because it does just look like a little trend going down. Then we have EOLS here, similar situation. Looking at the daily here, sold off down to that 200-day moving average line. We could actually possibly see, what looks like maybe, no, not a great trend there. RSI right now is at a 27. And then looking at the hourly, we want to see a couple more days of forming so we can draw out that trend line or support line. And this is what we do, is we just continue to look for plays like LYG here. This one, looking at this, go to the daily, it popped up, sold off. We'll just delete this from the watch list, right? And the reason why is because you can kind of see where it's just more consolidating rather than getting good amount of buying pressure. TEVA here, the thought process of this one is it's getting undervalued on that RSI. The hourly, you can see where it's starting to form that trend, so we'll wait a couple of days. LIN, this one actually looks relatively decent, right? You can see that trend line going in that direction. So if you you could enter on at the current price, right? Set your stops, set your stops just below it for a push up to like the 486 range. That could work out well. And this is what you do, right? You're seeking out plays, and that's, something like this. Could see an entry here at 75. For that push going up to those highs at 83. What makes up a very, very successful trader is just reviewing your plays, right? Looking for stocks, scanning for opportunity. But honestly, this is what I do every single week, every Sunday, to ensure that I know what's going on with the position. So I hope you guys all enjoyed it. If you guys did, hit that like button, subscribe. Don't forget code Black Friday for 51% off, and we'll see you guys in the next one. Take care, everyone.